Okay, good evening, good evening. How are you doing today? We have Abel Innocent with us. How are you doing today? If you can hear me, do let us know by typing in the chat section. I repeat, if you can hear us, do let us know by typing in the chat section. It's indeed a pleasure having you here, and you are the first person to join us. Hopefully, we have others that come on board in good time. So if you can hear me, once again, your feedback, your response is needed. Kindly type in the chat section. I will be the only one talking for day 4 of this masterclass workshop. It seems like you are joining us. You might be joining us for the first time. Can't remember seeing your name. So I'm going to wait for your feedback before we proceed. Can you hear me loud and clear? I also typed good evening in the chat section, and I'm going to type, can you hear us? Right, so I just typed, can you hear us? So I'm going to wait for your feedback, and then hopefully others join us in good time, right? And we want to believe that your day has been a profitable one, has been a good one, has been a productive one, right? I still await your feedback. Today, we're going to be talking about risk management. Beautiful. Thank you. You finally said yes, very clear. Awesome. So with that, I have your permission to proceed with what we have. This webinar, this session is being recorded as well. So you could also watch it after. So we're going to try as much as possible not to make it too lengthy. Okay, so it's a pleasure having you here, sir. And of course, we are going to be talking about risk management. Risk management, also known as money management. Right from Monday, we've been talking about the trading application, the MetaTrader 5, what it is, and how to use it to open, to close, and to modify trades. And then also on Tuesday, we went into the market analysis, where we looked at the importance of the market analysis and also how to use the fundamentals and technical analysis, how to combine them together in order to place trades based on a strategy, right? So we did that on Tuesday and Wednesday. So today, the final day, day 4, we are talking about risk management, what it is, the importance of risk management, and of course, how to calculate in order to minimize. Because the importance of this risk management is for us to be able to minimize our losses and then maximize our profit, right? So we're going to be looking at how to calculate for your risk and also how to maximize your profit accordingly based on your risk to reward ratio. Okay, so now let's proceed with what we have. And then a quick disclaimer for you and for everybody. Kindly note that the information that we are dishing out is not going to guarantee success. What will guarantee success for you is the application of this information. That means that once we dish out the information, the implementation is the next thing, and then you will see the transformation from whether a new or struggling trader to a profitable trader in no time, right? Great. So that's the outcome from today's webinar. We want to ensure that you get value for your time. So first of all, we are going to be looking at how to minimize losses based on your volume lot size calculation. You must be able to calculate your lot size and also your volume before placing trades, right? So in order for us to do this, there is a formula, right? There's a formula in order to get your proper volume. And this is something that is very key, very important for traders to understand. Why? Because before you enter the market, before you click on that buy button or the sell button, you must have calculated your risk appropriately based on your account balance, right? Let me quickly repeat that aspect. You must have calculated your risk which has to do with the volume, lot size. You must have calculated this appropriately. Number one, based on your account balance, because the person that is trading with $100 should not be using the same volume with somebody trading with $10,000. I'm sure you would agree with that. The person with $10,000 can easily use a higher volume, right? So here is the formula, right, in order to get the proper volume or the proper lot size to be used at the end of the day. So you have the formula as the amount that you are risking divided by stop loss multiplied by 1/10. This 1/10, it is a constant, it is always there, right? So now, of course, the first thing you need to know is your account balance. And everybody will know your account balance because you are the one that will fund your account. So the first thing you need to know is your account balance. That is the money in your account, right? And then you need to know what you are willing to risk. And we normally like to say the percentage of what you are willing to risk. We're going to use an example to explain this to everybody properly, right? Remember we said the first thing we need to know is our account balance, right? So for our account balance, let us assume that your account balance is $1,000. Let's assume you fund a $1,000 account and you're ready to start trading it live. By the way, this is one of the major problems that traders have been facing up till now. They haven't known how to calculate their risk appropriately, and then they place trades without knowing, and the losses they have are usually very, very large. You must always ensure that this problem is well taken care of, especially based on this calculation formula that we're giving you. So let's ask a quick question. I can see more people are joining us. You're welcome. America Lucky, Stephen Joe, John Adebayo. John Adebayo, you would have to work on your audio as it is not showing that you can hear. I believe this is not your first time, so he should be able to sort that out, right? So now let's ask this question. We want to risk a particular amount out of the $1,000, right? That is the first one here, the amount that we want to risk. So we're going to use percentage over our account, right? Percentage is always good so that whether it is $1,000 or it is $10,000 or it is $1 million, 1% would always be 1%, right? I'm sure you agree with that, right? So 1% will always be 1%. So who can help us out? What is 1% of 1,000? What is 1% of 1,000? I'm sure you can see what I'm writing by the side here. We're doing this calculation together. So you can as well be doing it from your own end. You can be writing this down. Normally, you should have your writing materials with you, and you should also be paying full attention. This training is absolutely free, but we need you to pay attention, and you must pay a lot of it. So who can help us out? What is 1% of $1,000? Okay, thank you. We have one person that's answered. And at this junction, I will tell everybody that you need to be careful over here. Because if you make a small mistake, you can easily, I repeat, easily lose more than you bargained for, right? So you need to ensure that your calculation is correct. If you want, you can use a calculator and so on. So any other person, Mr. America, Lucky has given us his own answer as $100. Any other person? Do you agree? Do you disagree? Do you have another answer? Do you agree with his answer so that we can continue? What is 1% of $1,000? Anybody? Now, I know we're a handful. We're not as much as we are supposed to. So I would like you guys also to try to invite people now, right? On your WhatsApp status, on your Telegram, on your Facebook, on all your social media handles. Try and put up the link and then inform everybody we're learning risk management and then psychology of trading, that they should hurry up and join us. It is absolutely free. Okay. And then Abel Innocent said $10 and Stephen Ojo said $10. Oh, wow. Interesting. So now we have two different answers. We have somebody saying $100 and then we have two people saying $10. So the question I would ask everybody is, who is right and who is wrong? Is Mr. America right? Or is Mr. Abel and Stephen right? Because both of you cannot be correct. It has to be one person that is right while the other is wrong, or two are wrong because both cannot be right. I hope you understand the English I just said. It might have been a bit of a tongue twister, but don't worry, I know what I said. I can say it again, right? I'm going to say it again and I'm going to wait for you guys maybe to do your calculations again. So I said it is either one person is right and the other is wrong, or both are wrong because both cannot be right. Okay? I'm waiting because I want the person that made the mistake or the people that made the mistake to correct themselves and then type it out. And if no answer, then I'm going to show you because this is math. You can bring out your calculator as well. 1% is 1 over 100, right? 1 over 100 multiplied by 1,000. I don't think we need to be doing this part of the maths. This is not what we're here to do, to be doing math calculation. You can use your calculator. I'm just trying to point out that you make a mistake, you can lose more money. So zeros, these two zeros cancel, these two zeros, say it is 10. So the answer is $10. Let's continue. We want to finish on time as we started on time so that we can give room to question and answers. And then I have a few offers for everybody, for those that will be interested in taking the trading to the next level. So wait till the end. There is indeed something good for everybody. Yes, indeed, everybody. You can take advantage depending on if you want to take advantage and take your trading to the next level. Okay, so we've established that it is $10, and I hope that America Lucky, you've seen your mistake. I can't hear or see, sorry, I can't see anything from you again, but let's continue. So now the account balance, the amount risk is $10. Now, what about our stop loss? What is our stop loss? For this example, let us just assume, is an assumption, our stop loss is 20 pips. Remember, you get your stop loss from your analysis. So let's assume that your stop loss is 20 pips. So now we have all that we need in order to properly calculate for our volume. Because the formula for the volume states that amount that you're risking, which is 10, right? Over here, you can put 10 here. 10 divided by the stop loss, which is 20, multiplied by 1 over 10. Who can help us out with this calculation? 10 divided by 20, multiplied by 1 over 10. You know, we always say it's always good to participate. Do not be a spectator. Do not just be here and be listening, but it's good for you to participate. Some people are joining, but the audio isn't on. So let me just type something out for them. Kindly enable your audio via Zoom in order to hear. Okay, so I think Mr. John Adebayo remains to hear. Who can help us out? What is the volume right here? What is the volume you got? America, Lucky, I hope you have seen your mistake. I want to point it out again. We're going to move on. So who has any idea the answer to this? If no answer, then of course I will do it myself. But we like when we're all engaged. It shows that we're together, number one, and then shows that we are understanding. Because I could as well be talking to myself and just be steamrolling, right, without checking back on you, but that is not good at all. Okay, thank you. America Lucky said, yes, I have. Thank you for that. So make sure you always calculate properly. If not, you could easily be losing $100 on a trade instead of just $10, right? Okay, thank you. And then Stephen Ojo said 0.5. Let me write 0.5 here. Stephen Ojo said 0.5. That is Stephen Ojo's answer. Any other person? Do you agree with Stephen Ojo, or do you have a different answer? Right? Anybody? I'm going to wait a few more seconds, and if I don't have any other person that is agreeing to Stephen Ojo, or that is disagreeing and giving us another answer, then we will just do it ourselves. Then I might not need to be asking if you understand and all. We just steamroll, right? It's always good for us to be together. It's going to help you more than it's going to help us. Don't forget this webinar, this session, this masterclass that we've had this week for beginners is brought to you by 10Trade, and 10Trade has your interest at heart. 10Trade wants you to be successful, and that's why we don't want to leave any man behind. Okay, no answer, no problem. So we're going to work with 0.5. We're going to work with 0.5, and that answer is coming from Mr. Stephen Ojo, as nobody else is replying. So I'm going to clean this up. Don't forget the answer we got is 0.5 from Stephen Ojo. We're going to clean this up and then we're going to do something. We're going to cross over to the next slide. The next slide is going to help us to know whether this is correct or whether it is wrong. Because if you're going to do the calculation that we wanted you to do yourself, it will be 10 divided by 10, which is 1. Then it will be 1 over 20. So what will we get for 1 over 20? What would we get for 1 over 20? If you're going to do your calculation, or I'm going to do basic math for you, since nobody is answering, I'll just do this and this will be the last time. I'm not going to do this again. So 20 in 1, it doesn't go, so it will be 0 points. Then we put 0 here. 20 in 10, it doesn't go, so we put a 0 here. This is basic mathematics from primary school. We put a 0 here, and then 20 in 100, it now gives us 5. So the answer that we've done from our calculation is 0.05. 0.05, if you look at it, this is 5 divided by 100. 5 divided by 100, 5 here goes into 20, right? So the answer should be 0.05, but nobody gave us that answer. So let's clean this up, and then let's go over to the next slide. The next slide is going to tell us whether you are right or you're wrong. So don't forget, Mr. Steven was the only person that answered and gave us 0.5. We were going to find out where 0.5 falls under, whether he is right or he is wrong. Now we have what is known as this lot size table in front of us, a lot size table. For this lot size table, we have different lot sizes. We have the standard, the mini, the micro, and we have different volumes attached to them. The standard starts from 1, mini starts from 0.1, and then micro starts from 0.01. So micro is the smallest lot size. 1 micro is 0.01, 2 micros is 0.02, 3 micros 0.03, and so on. And then they all have pip value. Pip value simply means how much will it cost per pip. For standard, it's going to cost $10 to 1 pip. For mini, it's going to cost $1 to 1 pip. And then micro is going to cost 10 cents to 1 pip. Micro is going to cost 10 cents to 1 pip. So now, the 0.5 that Mr. Stephen Ojo gave us, who can tell us, where does it fall under? Does it fall under standard, mini, or micro? Who has an idea? Thank you, Mr. John Adebayo, for joining us. I can see that your audio level has been turned on now. You're welcome. This is risk management. For the little part that you have missed out on, you can watch the recording, as we won't be able to go back every time to explain everything from the very beginning. If not, we will not finish with the class. Guys, you can also invite people by using this link. Put it up on your WhatsApp status, put it up on your Telegram, on your Facebook, put it up on all your social media platforms. Invite your friends, as they always say, invite your friends and invite your enemies. Invite everybody, let them come and learn so that maybe your enemies can later turn to your friends at the end of the day. Okay, so Linda said mini, so John said thank you, mini. America said micro, and Christian said mini. The question was 0.5, where does it fall under? Micro is 1 micro is 0.01, 2 micro is 0.02, 3 micro is 0.03, 9 micros is 0.09. 10 micros is 0.1, so that becomes 1 mini. 1 mini is 0.1, 2 minis 0.2, 3 minis 0.3. That means that 0.5 will be 5 minis, 5 minis, right? 5 minutes. So as we have 5 minutes for Mr. Stephen Ojo's answer, we now need to find out how much will it cost for 5 minutes? How much will it cost for 5 minutes? 1 mini costs $1 to a pip. 1 mini costs $1 to a pip. So how much will it cost for 5 minutes? If it costs $1 to a pip, how much will it cost for 5 minutes? If you look at it very well, it's going to cost how much? Can anybody help me out? I'll just put the dollar sign here and wait for somebody to give us an answer. To those just joining us, you're welcome. You can watch the recording that will be posted on the YouTube channel. And the YouTube channel is 10 Trade Africa TV. Okay, so anybody who can help us out, if it costs $1 to 1 pip, $1 per pip for 1 mini, how much will it cost for 5 minutes? Oh, let me just do it. Your responses are not coming as fast as possible. Thank you. Madam Linda said $5. And then Mr. John said $5. I'm going to do something personally. But before I do that, I'm going to talk to the management of 10 Trade. I'm going to be giving you like, how will I put it? I'll be giving you a sort of bonus. I'll be looking at those that answer fast enough, and I'll do something personally on my own for the person or the people that fall into this category. I'll give you something extra. It could be extra materials, maybe PDF, or it could be a quick discussion. It could be a quick consultation. Let me call it a consultation. It could be a quick consultation to find out how your trading is, what you're lacking, or whatever the case may be. And we could have that just the two of us on one-on-one for a few minutes. I'm just going to talk to them and then see how that can be incorporated, because we are not answering as fast as we should be. Thank you, guys. So you said $5. So that is $5 per pip, right? $5 to 1 pip, right? Now, how many pips stop loss were we using in that our calculation earlier? We were using 20 pips, right? Remember our calculation? We're using 20 pips stop loss in our calculation. So as we're using 20 pips, if it costs $5 to 1 pip, how much will it cost for 20 pips? If it costs $5 to 1 pip, how much will it cost for 20 pips? How much will it cost for 20 pips? Can anybody help us out? I repeat, if it costs $5 to 1 pip, how much will it cost for 20 pips? Okay, and then Madam Linda said $100, $100, okay, $100, okay, only Madam Linda, no problem. So you can see now that if it costs $5 to 1 pip, just like saying $5 or 5 naira to 1 orange, how much will it cost for 20 oranges? That is 100. So this is 100. But then the risk that we're supposed to have is $10. It's $10. What does this mean? This means that this 0.5 is wrong, because you're going to be losing more at the end of the day. Thank you guys for joining and then saying $100 as well, because 0.5 is wrong. You must understand the calculation that we did earlier. Don't forget, you can always watch the recording, right? And then towards the end, if you have any specific question, we would help you out. The recording is going to shed more light and you can watch it as many times as possible. So 0.5 is wrong. And then the answer that we did, let me clean this up. The answer that we did, we got 0.05. So who can tell us 0.05, where does it fall under? Does it fall under standard, mini, or micro? Can anybody help us out? 0.05, where does it fall under? Does it fall under standard, mini, or micro? Okay, thank you. Beautiful. Two answers. Aha. So I can see that we are together indeed, at least for those that are answering very fast. Okay, so Madam Linda said micro, and then Mr. John said micro as well. Okay, so let's try the micro. So you said micro, 1 micro is 0.01, 2 micro 0.02, 3 micro 0.03, 4 micro 0.04, and 5 micros is 0.05. So awesome. This would be 5 what? 5 micros. Somebody said mini now. That's wrong. It is 5 micros. Please, let's be together. Let's understand what we are doing. So it is 5 micros. So 1 micro costs 10 cents to 1 pip. 1 micro costs 10 cents to 1 pip. How much will it cost for 5 micros? Who can help us out? How much will it cost for 5 micros to 1 pip? 1 micro costs 10 cents to 1 pip. How much will it cost for 5 micros? 5 micros. Okay, we have an answer from Mr. John Adebayo. Okay, thank you. You guys, you are allowed to use your calculator, please. Right? Do not be afraid that you might get penalized for using calculator. No, this is your money. We don't want you to lose your money anyhow. That's why we said this risk management is to minimize. So we're looking at the aspect of minimizing by calculating for the proper volume lot size. So he says 0.5, right, which is 50 cents. So 50 cents to 1 pip, right? 50 cents to 1 pip. So our stop loss was what? Was 20 pips. Our stop loss was 20 pips. So if it costs 50 cents to 1 pip, how much will it cost for 20 pips? Who can help us? If it costs 50 cents to 1 pip, how much will it cost for 20 pips? 20 pips. How much will it cost for 20 pips? Can anybody help us out with that? I'm going to wait. Maybe you are using your phone to calculate. And maybe it's the same phone that you are using. Okay, beautiful. You can see the first answer we got was 1,000 cents. 1,000 cents. And then the next answer we got from Mr. John is $10. And I want to believe that 1,000 cents is the same thing with $10. So I like the way both of you calculated it, right? You just multiply the two together, right? So these two, right? The calculation is absolutely correct. And because the calculation is correct, you remember what we were risking was $10. And as it's $10, that means that 0.05 is absolutely correct. 0.05 is absolutely correct. Please be reminded that we do not want to be making mistakes, unnecessary mistakes. Thank you, Mr. Stephen Ojo too said $10. We don't want to be making unnecessary mistakes. If not, our account balance will be what? Will be reducing. And that is not good at all because you'll be reducing in a fast way. Instead of losing just $10, you'll be losing 100. Now, let me give you a quick scenario of what will happen. Assuming you calculate your volume lot size properly, and then you are having losses. From your $1,000, you had your first loss, your account balance becomes $990. Another loss, $980. Another one, $970, $960, $950. And this is you having plenty losses back to back. $940, $930, $920, $910. You had plenty of losses, but your account balance is $910, which shows that your account balance is still gallant compared to the person that makes a mistake and then is losing $100. And then the first loss takes him or her to 900, from 1,000 to 900, and then to 800, 700, 600, 500, 400. That's within 5-6 trades. You lost about 50% of your account balance. How would you be feeling? You will not feel good. Compared to the person that still has $910, you have about $400, and you lost the same amount of trades. But because of the poor calculation, the person that did not calculate it properly would be crying at the end of the day. So please take note of the calculation we did earlier and take note of this lot size table that you will use to confirm that the lot size that you have done is absolutely correct. Very key, very, very important at the end of the day. So now with this, we have looked at how to minimize our losses, right? Based on the lot size, the volume calculation. We're now going to look at how to maximize our profits, how to maximize our profit at the end of the day. This is based on the risk to reward ratio. This risk to reward ratio is a concept that we want everybody to understand. Once you understand this concept, then you are good to go. And this is the concept over here. The risk can be taken to be the stop loss, while the reward can be taken to be the take profit, right? So you have your risk to reward ratio. That's why before you place any trade, you must always know how many pips your stop loss will be and how many pips your take profit will be as well. Now, let me ask you guys this question. Can you buy something for 100, which is a risk? Can you buy something for 100 and then sell that thing for 10? Let me ask you guys this question. Can you buy something for 100 and then sell it for 10? What do you think? Can you buy something for 100 and sell it for 10? Your answer should either be yes or no. That would obviously let us know whether it is a good trade or not. Because this is what some traders are doing today. This is what some traders are doing today. Okay, and only one answer from America said no. No problem. I think I might just steamroll and explain without asking questions. Okay, let me explain this situation. Now, some people do this. They don't use any risk. They don't use any stop loss. And they might be going for a 10 pips take profit. What normally happens to this type of traders is that when the trade goes against them, because there is no stop loss, they stand the chance of losing the entire account. So this is obviously not good. You must always use a stop loss, as we always say. But then when you use a stop loss that is 100 and you're looking for 10 pips reward, then this is also not a good trade. Because if you have a loss, you have lost 100. If you have a winner, you have made 10. And then that 100 that you have lost, right, it will wipe out 10 winners, which is not good. Now, if you are risking 100 for a reward of 50, meaning that you buy something for 100 and you're selling it for 50, it is not good. Now, the concept of what we're showing you here, based on the risk to reward ratio, is that whatever your risk is, you must ensure that your reward is higher. This is also not a good trade. This is also not a good trade. You must always ensure that whatever your risk is, your reward is higher. And the higher it is, the better for you. So 100 to 200 is good. 100 to 500 is good. 100 to 1 million is good, right? So the higher the what, the higher the reward, the better. And you're going to get all of this from your calculation. It is your market analysis that will let you to know your entry and exit, right? So it lets you to know your stop loss and your take profit. So you're now able to determine whether the trade you want to take is a good one or not. So once again, in summary of this, always note that the higher the reward, the higher the take profit, the better that trade is. Do not place any trade where your reward is the same with the risk or it is lower. I hope you guys understand what we have just done here. Please make sure you have taken jottings of this, or you've done a screenshot, whatever is favorable to you. So now with that said, we're going to continue now, and we're going to quickly look at some terms that we need to understand. Right, we're going to continue now with this risk management, and we're going to talk about leverage, equity, and margin. Lots of traders do not understand this, so I want to quickly breeze through this to explain to you. Now, when it comes to the leverage, a lot of you have heard about leverage. If I were to explain leverage using one word, I'll call it a loan. Leverage is a loan, right? And you know, when you go to the bank for a loan, it's because you don't have enough money, right? So this leverage is going to help traders to magnify their positions where you can have more profit and equally have more losses at the end of the day. It's even because of this leverage that traders are losing a lot, because they do not understand it. They don't know how to use it. The higher the leverage, as we said, the higher the position, meaning that the higher the profit and the higher the loss, right? So you need to understand this leverage. Is very, very key, very, very important. Let me give you a quick illustration of this. Let's assume you fund your account with $100. And you guys can test this out and see for yourself. You fund your account with $100 and you're using a leverage of 1-to-1. You try to place your first trade. It will tell you insufficient funds. But you have $100 and you can trade with $100. But the leverage is too low. These two, your account balance and leverage, they go hand in hand, right? So this will tell you insufficient funds. But what if you increase your leverage to 1 to 10? You increase your level to 1 to 10, then now you could probably place maybe like 2 to 3 trades. You can probably place like maybe 2 to 3 trades, right? And then what if you increase your level to 1 to 100? At 1 to 100, you can now place like maybe 20 to 30 trades at the same time. I'm just giving you this as an example for you to understand better, right? Now, what if you're using a leverage of 1 to 1,000, 1 to 1,000? It means that you can place a trade or trades over 200 trades at the same time. But of course, nobody would do this, right? Excuse me, nobody would do this. But I've seen traders place 50 plus trades, and then they end up losing the funds even faster, even on the same day, because they are using a leverage that is too high. So you can use the leverage that is high, but make sure that you calculate your volume, the volume that we just did now. Make sure that you calculate your volume appropriately. So do not be afraid of the leverage. This leverage of 1 to 1,000 is just like saying the speedometer in your car. The speedometer in your car is up to, let's say, 240. It's up to 240. For those that drive, I don't know whether you want to answer. For those that drive, have you finished the 240 kilometers per hour before? I don't think so. Even me, myself, I haven't. I think the highest I most likely would have gotten to is around 140, 150 traveling, right? And that was a long time ago. Of course, now the older you are getting, the more cautious, the more you know it carries a high level of risk, and you need to be more cautious. So that is the leverage for you. So we've just looked at leverage, what it is, and we've looked at an explanation, right, to help you to understand better this leverage. So leverage is important because it can help you to make more money, but then don't forget, just like a coin has two sides, as you can make more money with leverage, you can also lose your account balance very fast, right? So when it comes to equity, we talked about this on the day one, right? You can also get this aspect over here from the day one recording on Monday. Equity is simply the account balance and your profit and loss based on your open positions, right? So you can write this down and you can go to your MetaTrader 5 platform and then play around with it. You will see exactly what we are talking about. Margin is that required equity, is the required amount of money to open a position or to open positions, right? And then free margin is the free equity, the free money that we have left to place more and more trades at the end of the day. So these terms over here, a lot of traders have heard about them, but not everybody understands them. The leverage, equity, margin, free margin. So these things, you can find them on your trading application, the MetaTrader 5. And of course, at any point in time, we always say, as long as you are on the Telegram group, you can always ask questions and then we would help you out. And don't forget, I'm going to be giving you guys some more information, bonuses at the end of this, right? So that you can benefit from it and take your trading to the next level, right? So now with this said, we want to cross over to the next thing that we have for you. And this is what we call trading psychology, right? Don't forget, if you have any questions, feel free to start dropping your questions. We'll start looking at them and then we'll help you to understand better. I hope that you have gotten value so far, so good. If you have gotten value from today's session, because I believe some of us have been in all the sessions, and I believe maybe one or two people have not been in all the sessions. If you have not been in all the sessions, kindly signify by typing in the chat section as well. Let us know that you attended only this one today, or you attended only 2 out of the 4, right? And if you need any assistance, you can always reach out to your account manager that will help you probably to set up your trading account, whether it's the demo account or the live account. And if you don't have an account manager, maybe you don't have an account, you have not registered for one with 10 Trade, then what you need to do is to contact the person that gave you this link, and the person would assist you to register for an account, right? We all must have an account so that we can start trading and start making money. We hope that you have gotten value. If you have gotten value so far, so good, let us know. We need to talk about trading psychology, as this is a very key, very, very important aspect of the business. For this trading psychology, we can also call it the psychology of trading. This is one key aspect that we know for a fact that traders do not talk about, that traders do not concentrate on, right? But this, trust me, it is much more important than the market analysis, than the strategy. Most traders are looking for the best of the best strategy. And then I have to tell traders, remind traders that there's no best of the best. It's how you use that strategy. And your psychology can easily help you to use the strategy the proper way. So now, what is this psychology that we're talking about? What is this psychology? Psychology has to do with having the right attitude. You must have the right attitude to the business. You must have the right attitude to trading. Apart from the right attitude, you must also have the right mindset. You must also have the right mindset at the end of the day. This is very, very important. We need to know what trading psychology is all about and why it is important. It is important because based on our emotions, it tends to get the better of us. So we must be able to what? We must be able to control our emotions. Trading psychology strictly has to do with our emotions. And because our emotions can easily affect our trading, I'm sure some of you would understand what we're talking about, especially if you have been trading for a while, right? So our emotions, we need to know how to control them. So we're going to highlight some things now that would help you to be able to control your emotions effectively. If you have any questions, don't forget, guys, feel free to start asking. Let me ask this quick question. Can you still hear me? Can you still hear me? I need your feedback on that. Even if it's just one person, can you still hear me? If your answer is yes, then type yes. Okay, thank you. Because if your answer is obviously no, you won't type no because you can't hear. So thank you. I can see that At least a few people can hear. John Adebayo said, yes, sir. Linda said, yes, beautiful. Now, I asked a very simple question just to get feedback from you, if you can hear me. And we had about 1, 2, 3, 4, 5, about 5 responses from Mr. John, Linda, America, Abel, and Stephen Ojo, right? Good. Well, we've been asking some questions earlier, but nobody answered, nobody replied. We're saying things such as, are you getting value? Do you have any questions? But nobody is saying anything. So it is good that I've gotten confirmation that you can hear. Let's continue. So we said this has to do with your emotions. So we're going to look at it based on your emotions and the things you need to know, the things you need to work on, you need to apply, right? Things you need to know in order to improve, things to know to improve on your trading. So this is why the trading psychology is so important. Thank you, Olatunji Quadri said yes as well. So these emotions, you are happy, angry, scared, or sad. What happens when you are happy, or what leads to us being happy in this business is when we're making money. You're making money, you are happy, and what happens? You want to make more money. As you want to make more money, greed steps in. Greed is a killer, and greed can end up easily allowing us to lose more money. Anger. Why are we angry? We're angry because we've had plenty losses back to back, and it's going to make us to revenge. You know, we're talking about emotions, and you can relate these trading emotions to general emotions, right? When we're happy, we want more. Greed. When we're angry, we're revengeful. The same thing with when we're sad as well, and then scared. So you can see the happy is a positive state of mind, while the remaining are negative. And then the truth now is that the negative ones are the easiest ones to get to us. You're angry. When you are scared, you don't even want to place trades. You are afraid, and then you end up not placing trades. So these are the things that you need to know, and we're just going to highlight them and talk about them quickly, right? And then, of course, it is over to you to actually apply them to your trading plan, trading journal, trading management, and trading goal, right? So these are actually the solutions to the many problems that traders are facing. Traders are facing many problems. We just mentioned some now. Revenge. And then let's do something. Let me ask you this question, and then let's get feedback. If we get feedback, fine. If you don't, in the next few seconds, I'm steamrolling. What problems have you personally, what problems have you been facing in the business? Whether you are new or you're struggling, tell us your problem. As an example, somebody that is new will say, I haven't gotten the right information, the source. We want to believe you've gotten that from here now. That's why we said, have you gotten value? And if you have been struggling, your problem could be, oh, I don't know how to do this. I don't know how to do that. I'm having losses because of X, Y, Z, right? Because of my emotions, because of trading without stop loss. I'm even giving you some. So let's get to hear from you. And if we don't, I'm steamrolling. We'll finish on time. This recording is not going to be too lengthy. And of course, we will help those that need help. If you need help, you should be responding. Okay. Abel Innocent said greedy. Okay. That's only one person answering. Madam Linda said quickly exiting the market. That has to do with your emotions. Stephen Ojo said finance. I can tell you that every problem you are mentioning, 10 Trade has a solution to them. For your greedy states, you are having the solution based on this training, and the Telegram group is also there to help you. Quickly exiting is your emotions. We're helping you now. Finance, we have what is known as a funded trader. Are you aware? I can't talk about it now because this is not the session for it, but look it up. Go over to the website, 10 Trade, right? Website. Under funded trader, you can get more information on how to get finance. You can also talk to your account manager. That's it, right? So there's something for everybody under 10 Trade. And I can tell you the funded trader is not under other brokers. You can do your research. So 10 Trade happens to be the trendsetters when it comes to that. Don't worry, you have more bonuses, more things at the end. Some of us do not say patience. We lack patience. We lack discipline. We overtrade. We have stop loss issues. We don't know where to set our stop loss. Some of us, we do what? We close our trades too early. We close our profits too early, and we hold on to negative trades for too long. So there are lots and lots of issues that traders are facing today. But you didn't mention all of these ones and even the extras that we're talking about. So I will just mention one or two. As you're looking at this list plus more, I'm sure some of you are nodding your heads where you are, and then you are saying, yes, indeed, that you are talking to me. That just call my name. You don't need to mention this list. Just call my name. That it is me you're talking to everything, right? So the trading plan simply means that you should have a plan for your trading. A trading plan is a plan for your trading. What is trading? Trading is simply buying and selling. What is a plan? A plan is a set of rules, is a guideline. So you must all have a guideline before you trade. Simple. That is what trading plan is. Okay. And Stephen just said, how much stop loss is ideal? How much stop loss is ideal? It is based on your account balance. It's based on your account balance. And then for the stop loss in pips, it is based on your market analysis, based on your technicals, where you are setting your entry and your stop loss. So I cannot tell you X amount is ideal, it's not ideal. It's based on the time frame. There are a lot of things that will determine the proper amount of stop loss in pips to use, which obviously is from the market analysis, right? So this trading plan, hope you understand what we just said now, Stephen or Joe. From your question, it seems you might need more and more training. I'm going to give everybody more information as a form of bonus so you can take advantage of it if you can, right? Because one thing I would always advise, let me even advise everybody now, because advice is always good. One thing I would always advise is that you make a list of all the problems that you feel that you have, whether it's finance or you don't know the right amount of stop loss. Make a lengthy list and then do what? Start to tackle them one after the other. Start to tackle those issues one after the other. Okay, so this is a trading plan. Oops, this is a trading plan right in front of us. On this trading plan list, you guys need to know the following, right? You need to know the following. You need to know the instrument that you are trading, right? How many instruments are you trading? So it helps to reduce over trading. If you are trading one instrument, of course, you should not be placing 50, 60 trades at the same time. One instrument would obviously more or less lead to a few trades at the same time. Know your time frame. It will determine the type of trader that you are. Then have your strategy, what we talked about for the market analysis. Write your strategy down for entry and exit, for entry and then also for exit, right? And then have your trade management. We'll talk about trade management now in a few minutes. Your risk, we just talked about the risk. Know the risk you're going to be using. Whether you're comfortable with 1% or 2%, please do not use a risk that is way too high. Because if you use a risk of 10% on whatever account balance, it means just about 10 trades in the negative and you have crushed that account. That is not the way to trade. Type of trader, you should also know the type of trader. Basically, have a plan. In summary, you need to have a plan for your trading. We can't stress that enough, right? Mr. Stephen just said, I do have a lot to learn. Don't worry, I'm sure you're not on the boat alone. I'll mention some things that you can take advantage of as we proceed. So this is the trading plan, guys. Make sure you write these things down. As we said, write down everything and start to work on them one after the other. Trading journal, as the name implies, a journal is a diary, is you keeping records of your trades. You must always ensure that you keep records of your trades. Very important. And this is how it's going to look like. Records is from your account history. When you place the trades, it records the time, the date, the type of trade, whether it was a buy or sell. You can see your account history here from what I'm showing on the screen. You can also get it from your own account history, right? When you have this account history here, right, it will be good for you to input it on an Excel sheet. I normally advise an Excel sheet because you can easily store there and not on a book or paper. As you can easily store, you can easily query. Excel is good for querying, and that's why we store on the Excel. What are we even querying? We're going to query things like the number of trades we have had. As an example, your trading journal basically is going to help you to know your winners and your losers, when your winners occur, when your losers occur, right? With all the instruments that you trade, all the pairs that you trade, it might just be so that, oh, USD JPY has been giving you your most winners. What does that mean? That means that you should be trading more of USD JPY compared to your remaining instruments. Oh, it gives you most of your winners on a Wednesday. What does that mean? We're trading USD JPY majorly on a Wednesday. Oh, you take more of sell positions, and those are the ones that win. Start trading USD JPY Wednesday sell in between a particular time using this time frame, trading based on the trend and not against the trend. So this is what your trading journal is going to help you to realize at the end of the day. Very key, very, very important. So everybody, it is a must, ensure that you have a trading journal to keep records at the end of the day. And trust me, it will help you to improve drastically. The same applies to your losses. Based on your losses, your trading journal will do something. Your trading journal will help you to know when not to trade, when not to trade. Somebody's asking a question. 4:30 News says by, I can't answer this now. If there's time, I will. This is yesterday's session. We need to continue so that I can finish what I have for you today, right? If you look at the timing, it's about 9-10 minutes to 9 p.m. We don't want to take much of our time so that you could do what you need to do, go to bed early, and so on, right? So trading journal, we talked about it. Everybody have a trading journal. It will help you to know when your winners occur, help you to know when your losers occur, help you to know yourself better as a trader. Trading management, how do you manage your trades? That is a very important question. There are two major ways to manage your trades. Number one, partial close, and then number two, trailing stop. As the name implies, partial close, let's assume you buy from here, right? And then the trade moves in your favor up to this point. As it gets up to this point, maybe it has moved to 30 pips in your favor. What do? You can do a partial close. You can close part of your trade. You know the smallest volume is 0.01. So 0.01, you cannot do partial close. But if it is 0.02, you can close 0.01, which is partial. So you can close 0.01 here and then leave the remaining 0.01 to run. And if it runs to maybe like 120 pips, then of course your remaining position of 0.01 is still in there and making profit for you. That is partial close, right? So you can always do partial close from the MetaTrader 5 trading application, right? You would close part of that trade. Now, the other one is trailing stop. Don't forget, these are trading management techniques for you to implement to improve on your trading, to work on your psychology. Let's assume the trade moves in your favor up to here. Let's even say 30 pips again, 30 pips. You know, normally, originally, your stop loss is always below your buy entry. So your stop loss is always at a negative, maybe let's say negative 20 pips, right? And this was where you entered from. What do you do with trailing stop? You move your stop, trailing stop. That means that you are moving your stop. You move your stop loss to this place here, and this becomes break even. This is now zero, right? This is where you enter the market, it becomes zero. Meaning from 30 pips in your favor, if it comes back against you and knocks you out here at zero, it is a break-even trade. Break-even, you did not make anything, you did not lose anything. But what if the trade goes further in your favor by 70 pips? If it goes by 70 pips, you can now move your stop loss to 30 pips. Move your stop loss to 30 pips, right? So if it goes back in your favor, goes back against you rather, it will knock you out for 30 pips. You still have profit. You have profit in the bank. What if it moves to 110? Move to 110, you can move your stop loss trailing, move your stop loss to 70. So these are the two types of trading management techniques that we normally make use of. And I actually used one of them majorly in two positions that were good winners for me this week, right? If you are in the Signals group, you would have seen a posting on that. And there will be more to come. I'm going to give you more information on Signals Group as I just let the cat out of the bag. I'll give you more information on that in a few minutes. Well, hope you understand this trading management technique that we have just mentioned. You can watch this aspect of the recording again. If it's just this aspect that wasn't clear to you, you can watch it again, play it back, and then understand the concept. What we want you to understand, first of all, is the concept, and then you know how to administer it to your trading. And that's why we always say that you must implement. It's a thing of implementing at the end of the day. Trading goal A trading goal is something that a lot of traders, they have even before starting the business. Let me explain. And I'm sure some of us are guilty, if not all of us are guilty. We normally say, how much can we make every day? I want to make $100 every day, right? This is not the way to have a goal. You can't have, $100 every day kind of target. If not, you're going to be putting pressure on yourself. What if there is a day that the market does not give you any opportunity? There's no opportunity in the market. It's not every day that shop owners they sell. If you're into cement or you are into telecoms or laptops, it's not every day that you sell. So that means that there's the opportunity or there's the probability that there might not be any opportunity. You don't trade, right? And if you have a trading goal where you say $100 every day because you want to make $2,000 in a month, what if the days there's no opportunity and you place a trade? You could easily lose $100. You could easily lose $100 because that is your target for each day. And if you lose $100, that means that you need 2 more days, more or less, to counter this $100. That is maths. If you play around with maths, you would understand what we're talking about easily, right? Let me explain this quickly to you, right? Let's assume Monday. Let's use Monday. Let's say Monday, right? You remember $100 target every day. Monday, there is no opportunity, but you place a trade and it ends up being a loss. And that loss is 100 minus $100. You've lost minus $100. What do you think your target would be on Tuesday? Remember, normally your target is meant to be 100 every day, but now you've lost $100 on Monday. Who has an idea? What do you think your target should be on Tuesday? Who has an idea? Because on Tuesday, adding these 2 days together, on Tuesday, you should already be on 200. You should already be on $200. Monday, $100, Tuesday, $100, you should already be on 200. So Tuesday, what is your target? Because now you are down minus 100. Your target is not 200. I knew you guys would say 200. Your target is 300. Thank you, Mr. John. It's maths. Your target is 300. So once you make 300 on Tuesday, it will now counter the minus 100 you had on Monday and give you that 200. Do you understand? It's now going to be 300. Interesting. What if, this is an assumption, what if on Tuesday you have another loss of 100? What is your target on Wednesday? You that you're saying you want to make $100 every day. And then by Wednesday, you should have a total of 300. That is 3 days, 100, 100, 100. But now, because you had minus 100 on Monday, minus 100 on what? On Tuesday. What do you think your target will be on? Beautiful. Now we are catching up with the maths calculation. Thank you, guys. It will now be what? It will now be 500. Because on Monday and Tuesday, you are already down minus 200. So minus 200 and 500 will give you 300. But notice something. Your account balance is dropping drastically. It's dropping drastically, but your target each day is increasing. Isn't there something wrong over there? And this is why a lot of traders are crashing their accounts, because they have the wrong trading goal. The wrong trading goal. I hope it makes sense. I hope you are getting value. It must make sense. You must get value, right? We're going to round up in the next maybe like 5 minutes thereabouts, so it might just be a little bit over the stipulated time. So apologies in advance for that, right? So hope you guys understand the concept. It is not every day that you'll be getting trades. So you cannot say, I have a trading goal of X amount every day. No, it doesn't work that way. And then I tell people, do you know that it's possible for you to have 1 to 3 trades? Yes, 1 to 3 trades that are good and positive that can give you your target for the month. 1 to 3 trades in a month can give you your target. This week, I can tell you for a fact, this week now, I had like 5 trades, 2 were winners, 3 were losses. And the 2 winners easily took care of the losses because of my risk to reward ratio. Even as a matter of fact, today, I missed out on about 2-3 trades, right? That's another story for another day. But make sure that your trading is such that when you have fewer winners, they take care of all the losses. But look at these ones. This is you putting pressure on yourself. This is a no-no, right? So let me clean this up so that we can round up within a few minutes. Don't forget, you can always watch this recording over and over again. It's advisable that you do that actually. One thing I want to say, I'm not going to mention this because we have different sessions for this. There are different ways to make money from the business of trading. Under the roof of 10 Trade, right? You can make money as a trader from trading. You can make money as a partner, also known as IB, introducing brokers. You must have heard about some of these things. You can explore the website. One problem that people normally have, traders, is that they don't go through the information on the website. Go to the information on the website. You see everything is here for you. There are different ways for you to make money other than trading. You can make money as a partnership. You can make money as a funded trader. Somebody was saying capital, finance is a problem. And for finance, if you look at it over here, for the problem of finance, this is it. It is what? Funded trader. There's a program, funded trader, where you can get good capital that will help you, and you can be trading like $10,000, if not more, at the end of the day. And then we have the aspect of copy trading. Copy trading is also there. You can come on board as a fund manager under the copy trading. You can come on board as an investor or even as an agent. An agent is one that will be looking out for fund managers or investors to come on board, and you can also get commission for all of this. So there are different ways to make money from the business of trading, or rather, let's say investing in the financial market under 10 Trade. You will not find some of these things, or you will not find a lot of these things like the funded trader. You will not find them on other brokers. The copy trading, you find them, but based on the agent aspect, you will not. So it gives you all of these extras under 10 Trade. That's why you are here, and that's why you need to stick to 10 Trade. Now, in order to round up, if you guys have questions, please feel free to start dropping your questions. And as I round up shortly, we'll go over the questions. If you have questions, feel free to start dropping them. Don't forget, in a few minutes, we're going to be wrapping up. The road to success doesn't have to be difficult. All you have to do is to get the proper education, and then you practice. We've given you the education, we've given you the information right from Monday till now. It is now up to you to practice. If you do not practice, how will you get the results that you are looking for? So you need to practice. It's a thing of need and not want. So the choice is yours. Do you want to be successful? If yes, practice. And then also, you need a mentor. Do you need a mentor? If you need a mentor, 10 Trade can easily be your mentor. I repeat, let me ask that question. Do you guys need a mentor? If you need a mentor, 10 Trade can be your mentor, and I can explain the aspect of the mentorship that you can take advantage of. That's why we said we have bonuses towards the end that you can take advantage of. I repeat, you can take advantage of them. So as a form of mentorship, sorry about that, close well, you can still hear me. Now, as a form of mentorship, right, I'm going to give you more information on that now so that you can take advantage, right? As a form of mentorship, I'm going to give you more information on that so that you can take advantage. But one thing I also want to say, please, if you have questions, feel free to ask your questions now as we are rounding up. I can see, okay, I can see only Abel said, yes, I need a mentor. Okay, no problem. Only one person said you need a mentor. Now, for Abel Innocent that needs a mentor, we have a Telegram group that we use for a little form of mentorship. It's a group kind of thing, but you need to participate. You need to ask questions and all. Information will also be dropped there. So we have the Telegram group for that, strictly for like training. And then we have a signals group also on Telegram. We have a signals group on Telegram as well, where signals will be dropped. And if you join that signals group, right, you see some of the things that were posted this week, and also the updates on the charts, everything based on what we have done over here. So it's a thing of practice what we preach. It's a thing of seeing is believing, right? So you have the normal Telegram group. It's free. Talk to your account manager for that one. And then for the signals, you need to fund your account with a minimum of $100, a minimum of $100. So if you're interested in the signals group, you can signify now. Let us know if you're interested. All you need to do is to fund your account with a minimum of $100. And then if you're interested in one-on-one, we have the one-on-one 30-minute session where for 30 minutes, you could be with me, right? And then we could help you to structure your trading based on you, not everybody. And then you can also tell us where you're having issues, and then we'll help you to fix those issues. A problem known is a problem half solved. So apart from stating the problem, would help you also with the other half. We'll tell you how to implement it, and then you do the needful. So you can also take advantage of that one-on-one 30 minutes session. And all you have to do is to fund your account with a minimum of $500. Remember, you're funding your account. It is not a payment, right? So you fund your account to take advantage of that. You can see that there are other bonuses for everybody, depending on, like some of us now, you might not want to talk in public. And some of us, when we ask questions, you don't answer. But if it is one-on-one, you are forced to talk. Because if we don't talk, we will not know the issue that you might be having in the business. So Trade will be your mentor with respect to that. And trust me, we've had a lot of testimonials, people that have come on board for the one-on-one 30 minutes session, and they can testify that it was really impactful and it's helping their trading, and they are growing steadily, consistently, and so on, right? So let us know if you're interested in the Signals group. That's just for you to fund your account with $100. Let us know if you're interested. If you're interested, let us know now so we could put your details down, your name down, and then try to work something out for you, especially for the one-on-one 30-minute session. That one is a minimum of $500 into your trading account. Guys, if you have any question, feel free to ask. I'm going to scroll up now and read the question from Linda C4 and then answer. Don't forget to follow us on our social media handles on Facebook, Telegram, Instagram, YouTube as well. Follow us on YouTube especially, that when this recording is dropped, you can always pick it up and watch it over and over and over again. I will also give you details of how to contact us shortly. So Madam Linda said earlier, the 4:30 news says buy USD and 5 p.m. says sell USD. How does one go about it? Now, check the calendar very well. Number one, the one that is high impact is the one that you should pay more attention to. High impact is over any other one. High impact is one that is red. That's one that you pay more attention to. And then don't forget also, you need to pair it with the technicals. So you just said USD, right? So are you trading Euro USD? Because that is a currency pair. You're pairing it to another currency. Are you trading Euro USD? Are you trading Pound USD or USD JPY or whatever that has to do with USD? That's a question for you. And then also, what time frame are you trading? And then know the trend, because you should be trading with the trend. So it's going to be a thing of combining the fundamentals and technicals together, right? And that's what we always say. You could have a scenario like 4:30, you have news on USD saying buy, as you mentioned, and then 5 p.m. saying sell. It doesn't mean you're going to be doing a yo-yo type of trading. You buy now, you sell now. No. You must look at which one is high impact, look at the trend from the charts, and then work your way around combining the two together. Let me ask you a question, Madam Linda. Let me throw you a curveball. What if you had at 4:30 p.m., you had two news for USD? One was buy, one was sell. What would you do? You can see that is another scenario. The same time, one is buy, one is sell. What would you do? Of course, you cannot make use of that information. You cross over to the technicals. That's why we always say you need to combine with the technicals. Okay, and you said gold, XAU USD. So for gold, check on the trend based on the time frame that you're looking at, right? If you're looking at 30 minutes or 1 hour, I believe the trend has been down for a while, right? So probably you might want to concentrate on selling. And where do you want to sell? You want to sell at the area of resistance. It's a combination of fundamentals and technicals. No way you can do without either of them, especially the technicals, right? Combine the two of them, practice them, and see how they work out for you. Is anybody interested in the Signals group? Let me know. That's a minimum of $100 into your account. Is anybody interested in a one-on-one 30-minute session with me? Let me know. That's a minimum of $500. You can type in the chat section, let us know so that we can see how we can structure something for you, work on the timing for you, right? Let us know. Apologies, this is about 10 minutes past the time. So in the next 1-2 minutes, we're going to be wrapping up. So if you have any questions, please feel free to ask now, right? I'm also going to give you information on how to reach out to us, assuming maybe you have something that you want to discuss later, right? You can reach out to your account manager. I hope you know your account manager. If you have an account with 10 Trade, then of course your account manager must have reached out to you either via call or SMS or even maybe through email or maybe even through WhatsApp. So you have an account manager, reach out to your account manager. You can also reach out to the person that gave you this information. That person will most likely be an IB, your partner, your upline or whatever. And then you can also reach out to me. I can give you my phone number now. So you can chat me up. Please, as I always tell people, I am not in the country. So if you call me, of course, you know the charges might be a bit higher, but not that crazy. But you can always reach out to me through WhatsApp, through chat. I'm on a different time zone as well. So this is my number. That is +234 8028463230. My name is Tolu. You can reach out to me. And El Rufai Yakubu, I noticed that you came in very, very late. And are you coming in for the first time? Are you joining us for the first time? I think I'm seeing your name for the first time, if I'm not mistaken. El Rufai Yakubu. Let me know in the comment section. So you all have my numbers. 08028463230. You can chat me up on WhatsApp and let's see how we Tentrade can help you out further. Anything you need, state it. We'll see how we can help you out at the end of the day. Tentrade is here to help you to get to your destination. What destination is that? Financial freedom. We're all looking for finance and freedom. A lot of people, let me also add this because people don't understand what financial freedom really means. A lot of people have finances, but they don't have freedom. Meaning they're working a good 9 to 5, they're making good money, but they're working too much overtime, weekends, they're working, and they don't have time to spend the money, so they don't have freedom. Why not have the finances and the freedom to travel on holiday, not just summer, travel on holiday anytime? Buy what you want, not necessarily what you need. What you need is most likely you will be on a budget, or what you want, you're not on any budget. You can buy your dream car, buy your dream house, whatever, right? The choice is yours. With that said, I'm going to stop the recording now and we're going to round up as I can't see any question coming from anybody else.